The best thing that meme coins did for us is they showed us how TradFi can work. When Trump introduced the meme coin, it was the most scalable transaction processing launch ever.
Bill, what are your thoughts on the banks? They're fighting back. They're trying to disrupt your ability to earn yield on crypto platforms like Abra. They're also trying to push back on DeFi.
It will be a fight to the death and probably theirs.
This episode is brought to you by Trezor. Trezor makes beautifully crafted hardware wallets that allow you to easily and safely store your crypto assets. Trezor's been in the game for a very long time. Since 2013, they were the pioneers of hardware wallets and the seed phrase setup, and their hardware wallets are open source. In fact, my favorite is the Trezor Safe 5. It's a beautifully designed and easy to use hardware wallet, guys, and it's my go-to. And they support a variety of coins. All your top crypto tokens, your Bitcoins, your XRP, Ethereum, Solana, and much more. And even new coins, even BlackRock's BUIDL token. So they support coins on the institutional side where you have tokenization of different assets and much more. And they even offer a great service that helps you to get your Trezor device set up. You get one-on-one customer support from their team. So you can check that out as well. So once again, I'm a big fan of this hardware wallet. So if you'd like to learn more, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Bill Barhydt, who is the founder and CEO of Abra. Bill, great to have you.
Good to be here, Tony. Good to see you.
Yeah, Bill, I thought of you in getting you on the pod because you've been in this market for a very long time, and I certainly want to get your expertise and your plethora of knowledge to weigh in on what's happening with Bitcoin. Obviously, we're seeing a bit of an uptick here at the beginning of 2026, but I wonder if we can go back to Q4 and what happened in October. Was that the top of the market for Bitcoin?
It was not the top of the market, but by top of the market, I assume you mean like some kind of cycle. I don't think so. I think it was a confluence of a lot of things, all happening at the same time, and then it was exacerbated by some issues that Binance had that they've apparently rectified since with with some exchange pricing and some Oracle issues that led to some cascading selling. It's crypto, right? So when it never just drizzles, it always has to pour. I can talk about the liquidity issues and other things happening and expectations and why gold was leading and we've seen this before. It looks a lot like 2020 actually. If you look at what happened back then going into 21, gold led the rally, and then going into later that year, crypto took over, first Bitcoin, then Ethereum, then alts had an epic run. So it feels eerily similar. Maybe people are a little concerned in the broader macro sense about what Supreme Court's going to say about tariffs, but I don't think it really matters at the end of the day. The Fed's got to print. Nobody, I shouldn't say nobody. Let me be more precise. Demand for long-dated treasuries is probably going to fall this year, which means that the Fed is going to have to accelerate quantitative easing in order to get long-term rates down. That's my kind of base case. That combined with the treasuries they're already buying, the lower interest rates that we're seeing will probably push rates lower and dramatically increase the money supply, which will really have an outsized impact on tech stocks, crypto. I think altcoins, particularly the L1s, I shouldn't say altcoins, the L1s are going to have an epic year, in my opinion. Certainly have a better year than last year, which couldn't have been any worse. So,
sure.
Actually, that's not true. It could have been worse, but I guess if you're holding a large bag of L1s, it probably doesn't feel like it could have been worse. But trust me, it could have been a lot worse. But I think that's in the past now, and I do think we're going to see liquidity-driven run where value catches up to price, or price catches up to value is more accurate in this case, just based upon the available liquidity. I think you're going to see stimulus checks from this administration, which is interesting. They're talking about confiscating 30 million barrels of oil to the benefit of both the American and Venezuelan public, which is obviously meant to, push rates down to basically create a forecast of GDP growth because there's more cheap oil in the system. So everything points to all of the things that were teed up in 2025 leading to more money in the so-called system in 2026. And our base case, like I said, is we end up buying a significantly higher percentage of our debt than we have the last couple of years because of higher rates and the desire for Fed to shrink their balance sheet. That's in the past now.
So, Bill, we know history doesn't often repeat, but it does rhyme. There are a lot of people who are saying, but Tony or Bill, what about the 4-year cycle? What about the number of days? And that took place around October. What about the bearish divergence on the weekly chart of the monthly MACD flipping red? So I wonder if we could get your perspective on that, because you have these two things on a scale here. I agree with you on the macro, all these things set up, and it looks like 2020, but yet the charts are screaming, certain things.
Yeah, so 4-year cycle is a tough one because there was a few things that were happening at the same time. There was a Fed cycle, right, where you could basically look at a long-term chart of long-term interest rates, and it looked like a precipitous path to zero, right? And we all thought, well, rates can't go below zero, and during COVID we saw that effective rates could go below zero, just like oil prices were negative for a hot minute. So that's over now. Okay, so that 4-year cycle died when we printed 25% of the money supply in 18 months. We didn't know it at the time.
Sure.
I mean, we'd never lived through it before. No one had, or no one alive had, and so we didn't know. Right now we know. Okay. Second, I would say, as it relates to Bitcoin's 4-year cycle, which to a degree overlapped with the money supply issues and treasury cycle that I mentioned, I was never a huge believer. You couldn't deny that there were a few data points that clearly said we were in this kind of sine wave cycle based upon the halvings, but the samplings were just too small, right? And so I didn't really care so much about that. I really cared more about the fact that you had limited supply. You had effectively a deflationary asset that's being priced in an inflationary asset. When you have those things and you have reasonable demand, and you're continuing to price something in the inflationary asset, which is the dollar, the price of the deflationary asset has to go up over time. It just does, right? And that has to, but by all viable measures, it's going to go up over time. And that continues to play out. That has been my core thesis for why Bitcoin is my personal beta. And anything I do in L1s, those are venture bets for me. Those are long-term bets. They could go up 10x this year. They could go up 5x over the next 5 years. It's all good. Those are venture bets based upon a core thesis that I have around the value of block space plus smart contracts, plus decentralization in the new economy. That's my personal thesis, and that's different from sound money, where Bitcoin becomes my personal beta. Now and certainly forevermore until something better comes along, which I doubt is going to happen. So long-winded way of saying I don't put a lot of stock in the Bitcoin based 4-year cycle. Never really did, and I've said that. You can go back and fact check me. I've said that many times. I did put a lot of stock in the 4-year Treasury market driven cycle, but clearly the Fed killed that. And there's others that believe I'm not enough of the weeds in fixed income anymore. But I others believe that the cycle has just been extended by a year, and that the government had hoped that they would be able to reset long-term borrowings or midterm borrowings at better rates, but they couldn't for myriad reasons, and that it's going to happen this year come hell or high water. That makes sense to me, but the bottom line is the economy is slowing outside of AI, especially. Right, pretty much everywhere outside of AI, the economy is slowing dramatically. You're still seeing lingering layoff effects of the high interest rates post COVID hangover. Everybody points to AI for that. I don't believe that's AI driven at all. I think it's just a hangover of Fed shrinking the balance sheets. And like I said, this administration is doing everything it can to kind of counteract that with whatever tricks or tools it can bring to bear off of the shelf that it has. No taxes on tips,
Yeah.
no taxes on Social Security payments, which never made sense anyway because you're double dipping.
Right.
The operative point being, it's more money in retail, and our economy is still retail driven at the end of the day.
Yeah, absolutely. So you believe that, people have to kind of update their mental model. They've been so used to this small sample size of having Fourier cycles, but it was the primary catalyst was liquidity or even the ISM. And that has been delayed, to your point. So risk assets or Bitcoin, altcoins and so forth, even, you look at the Russell 2000, all that has been kind of slowed down a bit. It wasn't a great year in 2025, but as the liquidity and the ISM and those things pick up, you'll see those assets follow.
Yeah, I accept that. Look, the hardest, everything you said makes a lot of sense to me. The hardest word in there, ironically, is the word we. So who is we, right? Because at the end of the day, you get it. You're masterful at simplifying this for, people who are like not in the weeds. But the bottom line is almost no one is in the weeds. And so it makes sense to us. We get it. We're knee deep in this price expectations. But for the average investor, if you don't have a long-term view, which is at least 5 years, you're not doing yourself justice, and you're basically going to create a lot of heartache for yourself unnecessarily, in my opinion. And if you can't look at it from that perspective, mean longer term, you need to right size your allocations in this world. And so while I agree with everything you're saying, because Bill's knee deep in the weeds, Tony's knee deep in the weeds, some of our cohort is, the average listener may not be. And my message to them is, look, have a longer term view. Everything should be 5-year minimum, unless you're really good at trading and speculating, and you can get in and out of day trading and all that stuff. I used to do that. I don't do it anymore. It's too hard. It's too stressful. It's not even worth it. If you look at the returns, it's just not worth it, right? So have a 5-year, maybe even longer time horizon. Accept the fact that we're spending $1 trillion to service the debt, and which is now bigger than I believe than our defense budget, and it's getting bigger, which means more money printing. And so I don't want that to be the truth, but it is the truth. And so if you have a long-term perspective on that, anybody who can afford risk on assets, tech stocks, crypto, is basically getting leverage on that system. It may be at the expense of other people who can't, but honestly, right now, as a wealth manager, that's not my problem. My problem right now as a wealth manager is making money for my clients and helping my clients make money. And that's how they should do it, in my opinion, as their fiduciary, right? I'm not giving investment advice here, but when I'm talking to my clients, that's what I tell them, right? And as an American, for everybody else, I hope our government gets its shit together, but I don't think it's going to.
Do you think somewhere in the future, Bill, they're able to use this technology, Bitcoin, blockchain, to help solve that fiat currency issue, that there's, with the combination of AI and maybe quantum, they're able to figure out something where they're not continuing the debasement cycle over and over?
Yeah, it's a good question. I was having breakfast with Peter Diamandis, who's a good friend of mine, the other day. Peter's really knee deep in the AI world. He was just coming back from an interview he'd done with Elon. And we had this long discussion about the intersection of crypto and AI. And I, explained to him that most of the people who are knee deep in AI right now don't understand where decentralization fits in, because they're building data centers the size of Manhattan.
Yeah.
Right. But the reality is that the future of agentic web or internet, in my opinion, is decentralized. And if you have an intelligent conversation with an artificial intelligent bot about conducting transactions, the last thing it's going to want to do is conduct transactions using an inflationary asset if it's holding that asset for more than a week. Because by definition, it's losing value at an exponential rate the longer it holds the asset, which in English means you don't want to use dollars if you're a smart AI bot. Now, I realize that this is a core thesis for Circle and Tether and others going forward, but I'm sorry, but it's just not going to happen, right? It may in the short term for ephemeral transactions, meaning transactions where it doesn't matter. You could trade in baseball cards or dollars or whatever because you're in and out quickly.
Right.
For certain types of, supply chain or factoring transactions, those will be dollars for a very, or CNY for a very long time. and that's fine. But those were already dollars. That's what I'm saying,
Mm.
right? So I'm talking about future businesses that don't exist that are going to be enabled by the agentic internet, which is going to be infinitely bigger than today's economy, driven by robotics and all the exponential technologies that I'm excited about. And crypto plays a central role there. And you're going to see a plethora of digital assets enabled by these systems that are deflationary by nature, Bitcoin being the most important one. I think Bitcoin could play a significant role. I think Solana and Sui, Aptos, those type of currencies could actually be used for ephemeral transactions themselves because they're inherently deflationary, right?
Mm.
I get the narrative of the maxis about why you wouldn't want to do that. And I don't agree with it, but I get it. But I don't think the bots would agree with them on this. I think anyway, the long-winded point I'm making is that I think that there's this coming economy that people don't understand yet that is so massive, that integrates all of this exponential tech, robotics, AI, self-driving cars, home automation. All these things are going to be fully integrated into our lives with an AI set of brains. And I think there's going to be lots of them, like lots of parallel matrices that we have to integrate with. And crypto is kind of the hard line into those matrices. And I'm here for it,
Mm.
and it's so early in understanding that, even like the most scalable blockchains we have now are just scratching the surface on the scalability we need to facilitate transaction processing for those types of systems. And yeah, I mean, thank God that we have these next gen L1s now that they're awesome.
Oh, for sure. So, we're talking about the outlook for this year, going back
Yep.
to the thesis of central banks are going to continue printing more liquidity and so forth, and
Yep.
not guaranteed, but we expect risk assets and these projects and all these things to rise. You mentioned L1s. There's also a big narrative of privacy. I'd love to get your thoughts on
Yep.
it. Do you see it as the next big trade, and what are some of the L1s you're primarily focused on?
Yeah, look, that's a really astute comment. I think privacy is going to have its day,
Mm.
so to speak. The Sui announcement was very interesting. Obviously, Zcash had an epic run in December.
Mhm.
That was remarkable, just given the nature of retail the lack of retail excitement for Zcash for years, effectively, right? And just a few tweets pumped the price because all of a sudden, you know, privacy is a narrative, right? It's a thing, right? And so the irony is that for me, as somebody who came and stayed for the decentralization and for the self sovereignty and the personal agency that that the crypto model enables and smart contracts enable, starting with Bitcoin, of course. It's ironic to me that this is happening now.
Mm.
But I think, but direct to your question, like the Sui announcement was huge to me. But I think you're going to see everyone looking at this hard, right? Like
Mm.
Ethereum's, Vitalik's actually had some really interesting commentary lately because
Yeah.
kind of it's almost like he was in a cave, big bear in a cave. He's a skinny runt, but big bear in a cave, sleeping for a couple of years. But some of the stuff he's been writing, I actually strongly agree with. Now,
Mm.
he's backed himself into a corner with poor technology decisions over the years, but I think they can undo that, and I think they can fix that. But I agree with the thesis of what he's saying. I think he gets ZK at a fundamental level. I think most of the L1, core devs get ZK and related techs at a fundamental level. It's my background. I mean, I was on the SSL team at Netscape, and so that's been a passion of mine since I was a kid.
Mhm.
And so I didn't really have the terminology and the lingo like I do now because of crypto mostly to explain all of this in a way that the non-techies can appreciate. But when you have technology that enables, a true libertarian, self-sovereign model that acts as a sanity check or a liberty check almost on government policy run amok, which it has for the last several years. You have to be excited, unless you just clearly don't get it, or you have no viable assets or believe you're never going to have any assets,
Right.
and that's the biggest problem that we face as society today is there's a percentage of the West, right, that believes that they're never going to be able to participate, whatever that means. And that's crazy.
Yeah.
It's not crazy that it is crazy that they believe that, because it's not true. I think we're about to enter an age of abundance, the likes of which humanity has never seen, right? The last bastion, the rate of poverty on this planet has been going like this, right? Now a lot of socialists would have you believe that that's not true. I don't know what you can see on my screen, but I'm making a very, pretty much a straight line down and on the chart, on a line chart, not a line chart, that basically shows where poverty is going, right? Meaning people that live on less than, let's say, $10 a day. We used to call it 10. I think they've raised it, but regardless, the poverty rate has fallen significantly on planet Earth. Right. I spent a lot of time in Haiti. Everybody's walking around with an Android phone in Haiti, the poorest country in the Western Hemisphere. Right. So my point is, like, we have a different set of problems going forward. Right. How do you basically give people hope that the abundance that's coming is going to affect them? Now, crypto will play a part in that,
right,
a key part in that. But, if people believe that they have no money left at the end of the year, there's nothing that Visa can do to give them hope so that they go out and spend more on their Visa card.
right.
Right. And so, I don't know if I'm making sense, but like, I just have this, I intuit that the biggest challenge we're going to have is that people are losing hope that they're going to participate in this abundant future that's coming. And maybe because they don't focus on it enough, maybe because the online narratives are so negative. But it just blows my mind, because anybody who pays attention should be like, wow, this is like literally the greatest time ever to be alive, except for like next week,
Right.
which is going to be even better, and so I think that the pendulum is clearly swinging towards decentralization as it relates to like financial services. It is not swinging towards decentralization yet as it relates to other types of technology, because they're too expensive and there's no easy way to build decentralized robots and decentralized car fleets and, decentralized medicine yet.
Right.
But I even think that's coming. And so we have to give people, it's incumbent upon anybody who wants to participate to give everyone else hope somehow, in my opinion. And as a libertarian, that's a tough one, because I usually like to think that people will act in their own self-interest, and then that will create a better economy. But we've dug this bit of a hole for ourselves, those of us who are believers in tech, and I don't know exactly how we're going to get out of it, but we will.
So, but from a larger perspective, Bill, is it kind of the ebbs and flows of human civilization and money and how currencies handle, right? I mean, I think as someone, I'm a millennial on the older side, seeing 2008, seeing 2001, what happened, 9/11 and so forth, those things were really impactful, not just culturally and societally, but financially.
Yeah.
But to your point, the technology is in the works here to bring us out the ebb and flow, right? To start trending higher, so to speak.
Yeah. So it's a tough question. It's a great question, tough question, because there's a lot of things happening at the same time. I do believe in the thesis that we are in this kind of late stage empire, fourth turning model. I've read Howe's books. I've read, pretty much all of the interesting books that I can find on this topic. And it does make sense, right? And 9/11 events do kind of point to, a modern version of what happens in a late stage empire when you look at similar events, and it's just more dramatic because we didn't have jet planes the size of a football field that you could fly into a building in the 1800s, right? I mean, it's crazy. So that's different this time, but the idea of a late stage empire is not different. The idea of the pendulum swinging, right, is not different. The fact that we have computers and machines that have the IQ of a PhD in every subject, every subject is new. We didn't have that last time. Napoleonic Wars or Dutch East India Empire, they didn't have that collective intelligence. That doesn't mean that we're going to be smarter. It just means we could make for all I know, we can make dumb mistakes faster. I don't know. I hope not, but I do think we're going to be smarter. But I don't think it's like who's the next empire anymore, right?
Mm,
The rise of China is inevitable, but I don't think China is going to be the global empire the way the U.S. was. I kind of have this growing thesis. It's almost like the next empire versus the internet.
mm,
It's not even about the U.S. The best thing the U.S. can do, being $40 trillion in debt, is enable global exponential technological growth where we play a central role.
mm,
That's the best thing that we can do for our own self-interest, which I think happens to align with humanity, right? Maybe and there's the answer to your question, but basically what I'm getting at is I think that yes, this has played out before. I think the cycles may be broken for a few reasons, meaning, it's not going to look like just the next wave, like Dalio talks about the cycles of generations,
mhm.
and you can't deny the history. But I'm always weary of here's why it's different this time. But anyway, here's why it's different this time. And I do think it's, hey, we do have machines that have collective intelligence that is a PhD level and everything now.
Right.
We have the ability to move ourselves in real time anywhere in the planet that we want. We have relatively abundant energy. The vast majority of the planet lives above the poverty level now for the first time ever. And it's getting better. We're about to enter a new age of exponentially growing abundance. And like I said, the biggest challenge we have is that a significant portion of the population either doesn't see it, feel it, or believe it.
Mm,
And maybe it doesn't matter. It used to not matter because everybody died,
yeah.
ironically, right?
Mm,
Now, ironically, one of the side effects of what's coming is that people are going to live a lot longer. Now, this relates to money because if you look at how empires inflate their currency to deal with their poor policymaking, it happens to coincide with life expectancy because it's the easiest way to hide what you're doing. In other words, if you have a lot of money and the government is inflating prices by inflating the currency to effectively erode the purchasing power at 6-7% a year, but you're going to be dead in 20 years or 25 years, the pain isn't really acute. It's annoying, right?
mhm.
But it's not like acute for most people because either one, you don't have any savings, or two, you have more than enough. And so the fact that they're taking a bunch away via, artificial money printing, it's like I said, it's aggravating at worst. If we start living to 130, 140, that's not going to be the case anymore. You
Right.
can't have a stable monetary system based upon a currency whose value you're eroding by 7% a year. They'd be rioting in the streets. Occupy Wall Street gave us a sense that people were starting to get it to some
Yeah.
degree. They couldn't explain it, right?
Right.
If you ask the average person why Occupy, they're like, we're getting screwed, right? They screwed us, but they saved the bankers, and that was true. But I'm giving you the real behind the curtain. Like, you're getting screwed because they're eroding the value of your money and you're blaming the billionaires. The billionaires are just able to make levered bets on the erosion. You are not. That's the difference.
Right.
It's the system that's fucking you. It's not the billionaire,
Yeah.
right? And so that will be acute when we start living to 130, 140.
Mm,
Right. And so there's this confluence and it's funny because I was having this, I was talking to Peter the other day and his big spiel is longevity. Right. And so the two are coming together. He's a huge Bitcoiner and client of Abra. And so we talk about that. Right. I mean, what's going to happen when his clients start living to 140? Right. He says, well, they're going to do what you're doing. Their beta is going to become Bitcoin because there's no way they're going to hold assets priced in dollars or even dollars itself. Right. So, yeah, I think there's a real chance that cycle is broken for all of these reasons.
Yeah, to your point, I imagine like with these AI agents and AI, coming at us from all directions, it'll be on your phone. It'll be companies are going to have their own AI versions. You have that collective knowledge, like you said, the higher IQ, some wisdom. So maybe we don't have to kind of go through that cyclical pattern of the common failures or pitfalls of human nature. Some of that could be mitigated. Plus, you have decentralization with blockchains and hard assets like Bitcoin that could help take some power away from the likes of the banking cartel and things like
Oh yeah,
that.
yeah,
So,
for sure.
to your point, some of those things are alleviated.
Yeah, look, I mean, I everybody was tripping over themselves about this DTCC announcement from a couple of weeks ago, right? Where they got, I guess, permission to offer tokenized shares through their settlement system. I may be saying that wrong, but I think that's more or less what the announcement was. And to me, that's ridiculous. I mean, no offense to DTCC. I think they have to do what they're doing because they need to justify their existence. But the whole purpose of decentralization is to eliminate the need for them to exist, right? Just like it's, I think Visa, and look, I have friends at these places. I know, sorry to everyone, but
Sure.
Visa, Depository Trust, Bank of America, the best thing that could happen as a result of decentralization and smart contracts is that you all no longer need to exist and nobody wants to use your products anymore, right? And it just, it's not a knock on the system. It's just true, and so stock trading is going to fundamentally change in the next 36 months where you have natively issued equities via smart contract tokens, meaning they're not tokenized versions of existing shares. Those native, tokenized equities will be 24/7 borderless, and you'll begin to see the value of international or domestic, I should say, securities regulators diminish, right? And so the question will be, okay, well, if I have the equivalent of an S1, how do I see that? Well, it'll be on chain, and the market will police itself over time. You'll still have courts to adjudicate, but that's where this is going. So you're going to see, I think, a massive movement towards traditional finance moving into DeFi. And it started with dollars, of course. We use stablecoins and yield products, and the next generation is equities. We announced a synthetic dollar at the Solana conference, which is our first push into enabling exposure to real world assets. We wanted to do it in a way where it eliminated the need for exposure to the banking system as best we could, which is why we went up with the synthetic dollar based on Solana. Which I think is just a killer model because you get the yield, you get a stable dollar, and you can do it via neobanks because a lot of them are based on Solana now, and you'll see us do more and more in this area in equities, in fixed income, in real estate, and I think figuring out how to natively tokenize these things or stuff is the big prize from a TradFi perspective. And that enables new businesses from old world assets, which is awesome. The even bigger prize is the AI, the crypto integration into AI for the agentic internet. There's no other way to do transaction processing for the agentic internet that makes sense to me. None. And at scale, right? And so why would you want an off switch? Why would you want to use an Oracle database for an AI agent that somebody can control? It makes no sense.
Right.
I shouldn't, there probably are instances where it does, but for the vast majority of applications, to me, leveraging decentralized systems make more sense. So I think the future in both areas is of 24/7 equities trading, no borders, agentic internet, on 24/7, no borders. It's super interesting to me.
Bill, what are your thoughts on the banks? They're fighting back. They're trying to disrupt, exactly what you're talking about with stable coins, your ability to earn yield on crypto platforms like Abra and other platforms. They're also trying to push back on DeFi. I mean, I saw the letter from Citadel to the SEC. So they're trying to fight. I hear they're lobbying hard and things like that.
It's a fight to the death. I mean, and it will be a fight to the death, and probably theirs. And I don't, I'm not trying to be facetious or just look. In the new world order that's coming, certain arcane business models and structures don't make sense. We are operating with securities rules that predate radio.
Yeah.
Or television, maybe, but maybe radio, but certainly television. Never mind the internet and AI and mobile phones and crypto smart contracts that won't no off switch and no borders. And so that's crazy. The best thing that meme coins did for us is they showed us how TradFi can work. In other words, when Trump introduced the meme coin, I wouldn't have done it if I was him. I realize it wasn't him; it was other people that were using his name. But whatever, I still wouldn't have done it. But put that aside. It was the most scalable transaction processing launch ever, and I'm including Visa in that. Okay, it showed us that we can use this stuff to build scalable platforms. So now, if you're going to build a stock-based system, neobank system, you have to look at Solana. You have to look at Sui, Aptos, Algorand, and all these platforms because they do scale now.
Right.
Right. And so they're moving more and more along the path of decentralization, which is what we want. And so yeah, I mean, you have to basically be bullish on that migration of old world stuff to new, plus the enablement of the things you can't do today, which is that agentic, we all have bots running around the internet, doing things for us.
But Bill, there's an interesting dichotomy because you have these banks adopting crypto. Just yesterday, we heard Morgan Stanley file for Bitcoin and Solana ETFs. Today, I think they meant to file for Ethereum. You got Vanguard capitulating, right? But yet they want to tweak certain things. So on one hand, we're tokenizing, we're launching stablecoins, we're launching ETFs custody. On the other hand, Congress, we need you to roll back some of the Genius Act items. Is that weird or just a control thing?
It's the same. Look, it's all a fight to the death. I think you're going to see every bank try to basically become DeFi friendly, smart contract friendly, right? They're going to try to make their wealth division look more like Abra. We're going to use vaults and all these fancy things to let you hold crypto and do Bitcoin-based lending like we do, but they're not going to be crypto native. They're still going to be operating under those FDIC, OCC rules. And as the current generation of teens and 20-something takes over the wealth, they have no interest in that boomer shit. None. They want to hold their money in stablecoins or crypto. They don't want plastic. They just want to point the phone. They want instant on credit, right? Why should I have to apply for a credit card for an ephemeral transaction?
Right.
I hold all these assets. Just give me credit when I need it against the value of those assets. And if I don't pay you, take it out of my assets, right? That makes sense to me, right? And that's Bitcoin collateralized loans. Today we use them for big purchases, but in the future it's going to be small purchases. And so there's this changing of the guard from an ownership perspective that's coming. And it happens to be coming at the same time of all this other stuff we talked about around, ownership in this exponential age, which is a problem. But still, there's this, 15-ish trillion in wealth that's about to be moved from, people who are, retiring, dying into, the next generation who are in their 30s and 40s, and then it's going to move down into people who are in their teens and 20s now. And like I said, they're just not going to operate. They're not interested in your Bitcoin ETF. They're not. They're not interested in your, money market product, paying, or CD paying 1.5%. They're just not. Right. And so they're interested in crypto. They're interested in smart contracts. They're interested in these, prediction markets. They're interested in games. They don't believe in the dollar-based economy anymore. It doesn't work for them. Even if they come from wealth, it doesn't work for them. Right. They don't get it. I mean, they think it's just the dumb things that the boomers did when they did it, and it's not like their thing. Right. And I talk to my own kids about it. It's like they understand that they have to operate in that world, but they think it's stupid.
It's so interesting, Bill, because there's just the human element to this. Like there's a saying, nothing new under the sun, but just there's different times of different technologies, right? So maybe the same thing was happening to a certain degree in the late 1800s, early 1900s, in that industrial revolution with horse and buggy to automobile, candles and lamps to electricity, and so on and so forth.
Yeah, I wasn't there, but I can understand people saying, "Hey, why do we need this?" My horse gets me there. I can't. It's very hard for me to fathom that when you see a light switch go on the first time and it's light in your house that was never light in your life, that that's not like, oh my God, thank God for this. But who knows? I don't know. I actually have read a little bit about Edison and those times. And, ironically, it was like, I think it was JP Morgan himself who was financing Edison and a lot of those things because he wanted to be the first to have the lights. He literally
Mm.
financed a lot of it to make sure that the wiring that they were laying made its way to his homes and his buildings in New York City because it
Mhm.
was a show off thing. Right, he wanted to be the one who could basically flip the switch in his home when people came to visit at night because everything was candles before, right? But it made its way to everyone, and I think this is the same. But I think
Yeah.
we are in an end game now, and I think it
Mhm.
may take 10, 15 years. I don't think it's going to be as abrupt. Maybe I think at some point all this stuff is just going to be the way finance works, and it will have crept up on everyone, and there'll still be a bunch of banks. I mean, look, that's why it all makes sense when you line up the stars. Why was Elizabeth Warren so hell bent
Yeah.
on killing our space? Why? Because we
Bankruptcy.
looked at her funny? Because I called her names online? No, because her goal is to socialize the banking system
Yeah.
and basically, preserve, socialist hegemony under, a unified Citibank or Chase or whoever it is, the anointed one ends up being. And that's not reality. The reality is the pendulum is swinging towards decentralization. They've basically lost before the battle even started. It just was a very expensive multi-year detour, which cost me a lot of gray hair.
Mm.
And we are where we would have been anyway, minus the gray hairs and all the money we had to spend on lobbying and all this other crap that we shouldn't have had to spend. But the outcome is going to be the same either way. Banking systems will be replaced with DeFi, right? Credit will be replaced with, smart contract based loans, leveraging tokenized assets or Bitcoin as collateral, right? Smart AI agents will use smart contracts to process transactions. And it was going to happen regardless of what they did the last or tried to do to us the last 3 or 4 years. And some of it was self-inflicted, of course, but independent of that, we're more or less where we were going to be anyway, in my opinion.
Yeah, I often say that disruptive tech always wins. Like the incumbents will fight tooth and nail, but eventually, the technology always wins. Throughout history, that's been proven. And on that note, we got the market structure bill in the Senate. Markup apparently is happening next week, or the vote for the markup.
Yep.
What are your expectations? Do you think that gets passed this year? And what do we see after that? Do we see a lot of M&As and so forth?
Yeah, so it's actually because of the nature of this set of legislation, it's actually a little complicated because you have two different bills in the Senate. You've got the ag bill, which is commodities, because commodities and commodity futures are regulated as an agricultural service historically in the U.S. And then you have the banking committee, which oversees the securities industry, and those two have to be integrated and reconciled, and that hasn't started yet, to my understanding. They're talking, of course,
Hmm.
and kudos to David Sachs for facilitating a lot of that and pushing this as a key item in the president's agenda. But that integration has to happen, and it will. And I do believe it'll be difficult to get done this year, but I do think it'll be close. But I think they will.
Hmm.
And I think if you think about the time that it takes, all the other things that are going on with, now midterm elections cycles coming up, it's going to be tough, but I do think they'll get it done. They
Hmm.
have to push hard to get this integration done of the two bills now.
Yeah, absolutely. Fingers crossed they can get it done, Bill, because it'll be really great for the market. You mentioned you and the folks at Abra launched the synthetic stablecoin. Anything else you want to highlight that you guys have launched, or what's on your roadmap this year?
Sure. So we do have a bunch of announcements this year. It's going to be a fun year for us. We've been working on some awesome stuff. We had a great year last year. I mean, the government really put us through the ringer along with everyone else for a few years, so it was tough. But we're fully back. We relaunched our services under an SEC RIA umbrella, ironically,
Mm.
and we're one of the largest, if not the largest, kind of wealth advisor in the crypto space, facilitating yield, Bitcoin, Ethereum, Solana backed loans. That business is booming for us. our clients have a vault model now where everybody gets their assets in a segregated vault. They're not on our balance sheet. So each client is more or less operating under their own personal balance sheet using this separately managed account. Crypto, we call it vaults, but in traditional equities, they call it SMAs, or separately managed accounts. And it's just the way people who dig in want to use crypto,
Mm.
right? I mean, if you know anything about what we've been talking about for the last few minutes, it's like, okay, why would I want to basically operate if I believe in the ethos of decentralization? Why would I want to leave my assets on a centralized exchange that's on the exchange's balance sheet? That is literally orthogonal to everything we've been talking about for the last 20 minutes.
Right.
Whereas with the Abra model now, I basically retain title to my assets. I can basically guarantee that I can see those assets on chain. If Abra goes away, I get those assets back. So it's if I don't understand the tech and I'm scared of cold storage, and I'm going to use DeFi anyway, so cold storage isn't really that helpful. Abra and the Abra model is the right way to do this, unless you're a PhD in computer science and you're comfortable, doing all that stuff on your own, right? So our clients are just not going to do that, right? And so anyway, we're managing hundreds of millions now via that model, migrating other parts of the business to that model, launching a new mobile app later this quarter. If we get it done out this quarter, might be early next quarter, but we're pushing for this quarter, and it's killer because it's the first app I've seen that will allow you to access that vault model with a consumer-like experience. So for our high net worth family office clients, they'll have like a Robinhood-like experience, but they're getting their own vault.
Wow.
I've never seen that before, right? So that's where this is headed. There's other stuff we're announcing soon. I can't give away legally, but yeah, I mean, we've come a long way to a little bit of a circuitous route, not necessarily self-inflicted, to everything self-inflicted because it's our choice to be in this business, I suppose. But independent of that, it's not self-inflicted. But we're still here, and I've never been more excited about our future for Abra. I mean, we've some very happy clients right now, so.
That's
That's what it's
awesome.
all about.
That's
Yeah.
awesome. But I look forward to having you back on as these new features get launched, and that's exciting. So I'll be looking forward to that and retweeting and sharing the news and all that. So thank you so much, Bill. I appreciate you.
Thanks, Tony. I appreciate you and everything you do. I'm a fan of all the interviews you do, and I listen. I've got a small number of podcasts I listen to regularly. This is one, and so just keep doing God's work. It's all good.
Awesome. Thank you so much.